You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it is time for TWIFO. This Week in Futures Options, the program that breaks down what's going on the other side of the options fence, the futures options. So probably going to talk some energy, probably going to be in there, probably going to talk some equities, a lot going on out there these days as well. Maybe sneak in some other sectors that are lighting it up these days and certainly dominating a lot of the tape out there from a news perspective, things like lean hogs and other things like that. Get a bunch of your questions as well. My name is Mark Longo from theoptionsinsider.com, as well as, of course, upon this fine network upon which you're listening to this show right now. Hopefully, if you like what you hear, head on out to your platform of choice, leave a nice review to keep those new folks. There's a lot of folks discovering our stuff, as you might imagine, these days. Everyone's indoors and kind of freaked out about the markets, so they need a little something to take them off the edge, maybe provide them a little bit of information, education, analysis about what's going on. So welcome to all you newcomers out there. And then B, if you like what you hear, keep those reviews out there so folks can continue to discover this network. And, of course, keep those questions coming. We do love to hear from you guys. You guys have been overwhelming us with questions, as you might expect these days. So we'll try to get as many of you on the program today as we can. Speaking of joining me on the program, first off, we got our old friend holding down the FTSE Russell hot seat out there this week, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there in FTSE Russell land. Mr. Smith, welcome back to TWIFO, sir.
It's great to be back, Mark. Thanks for having me on the show. I'm really looking forward to having a fantastic conversation today. So thanks for having me, and I'm looking forward to it.
Yeah, you're looking forward to it because it's a fun conversation, because joining you in that FTSE Russell hot seat may get a little crowded. You may have to squirm over a little bit, Sean. We got to do a twofer in the FTSE Russell hot seat today, because also joining you, old friend of the program, hasn't been on in a little while, Mr. Rick Rosenthal, the Director of Business Development for FTSE Russell Indices over there across town at the CBOE. Mr. Rick, welcome back to TWIFO, sir. It has been too long.
Thank you, Mark. I really appreciate it, and I'm excited to be on the show today with you and my good friend, Sean. We've got some exciting things to share with you today, and look forward to getting into it.
All right, I'm looking forward to it as well. Before we get to that, of course, as always, listeners, you guys can play along with the home game, generate the reports for all the names we're going to talk about, as well as any other name that flights your fancy out there. Maybe you want to look at fluid milk at 3 in the morning. We won't judge. CMEgroup.com/TWIFO is the place to go to get the vol breakdown, the open interest, the skew, the unusual activity, all that good stuff. All the stuff we're going to talk about here on the show today, you guys can check out for yourselves. CMEgroup.com/TWIFO. And since we're talking all things lighting up over there on CME land, Mr. Rick, you are our guest. I will allow you pride of place for where we want to start our journey. Usually I like to look at what's moving and shaking out there to the upside and to the downside, the top 5 in each direction. So I'll let you choose, Mr. Rick. Should we start looking at the upside, a.k.a. the light side, or should we go dark side to the downside, sir? What are you feeling this week?
We're overwhelmed with so much negative in the world. I think we need to start off with something positive. So let's go with something positive.
I concur with that, sir. I think I see why you and Sean are such good friends. You are of similar minds on this type of thing. So let's kick it off to the upside, listeners. By the way, if you run that scan for yourself, go back a week ago to our show from last week. You can do that over there on the /TWIO as well. You will see, or /TWIFO. Both of them work, TWIO and TWIFO. You will see there's a lot of upside, a lot of green on the screen out there, a lot of moving and shaking, mostly to the upside this week. So that's kind of been our narrative for a while here. You know, it's mostly upsides, mostly downsides, mostly downsides, mostly upside. It's usually leaning in one direction these days every time we do the show. And this week, at least, it's to the upside out there. So number 5 on this upside mad dash of green, a little name you may be familiar with, the Russell 2000, up 8.87%. Once again, small caps leading the dance out there. Number 4, another old friend. A lot of old favorites here on the list. Class 3 milk dairy. You guys have been asking us what's up with dairy. Dairy lighting it up again this week, up nearly 10.5%, 10.42%. Number 3, good old RBOB, up about 12.25%. Number 2, lean hogs. Going to get to those in a little bit, listeners. Up about 12.5%. And number 1 with a bullet this time again to the upside. The rates coming in the form of Eurodollars up 20.25%. It's just another crazy week out there in Eurodollars land as well. Let's look to the dark side now. The bottom of our top 5, which I guess if you got to be in the bottom 5, I should say bottom of our bottom 5. If you got to be in the bottom 5, that's where you want to be, number 5. That's gold, off nearly 3%, 2.96%. A lot of metals here. Number 4, palladium, off 3.14%. Number 3, the old silver, off 3.19%. So pretty much a lot of the metals you guys like to watch and trade, off about 3% or so this week. Rough rice, number 2, a rough week for rough rice. Say that 5 times fast. Off 3.74%. And number 1 to the dark side this week, wheat. Haven't seen wheat on the list for a while. Off 5 and about almost 5.25%. You know what wasn't off this week, though, are the numbers coming out of our friends across the street over there at CME land. They reported their earnings. We are in the midst of earnings season, listeners, so a lot of equities are dominating the mind share out there. And CME was one of them. And surprise, surprise, we've been talking here how the numbers for March from an ADV and everything else perspective, open interest, were all blowing the doors off. Well, surprise, surprise, those numbers looking good out there for CME as well. Revenue up 29% to $1.52 billion compared to the same period last year. ADV, which is where we're interested, more than the revenue numbers, what the volume is, was up 45%. Again, we said that was just a crazy quarter. Also worth noting, a lot of you have asked us, and we've even had poll questions about this, what's going on with the trading floors. They asked Terry Duffy about that. He said the company would make a decision on reopening the pits in keeping with the health officials' guidance. He said we will not do anything irrational, quote unquote. So again, not jumping to saying we're going to reopen anytime soon, damping down those expectations a little bit. He also did respond to a question saying the cost of shutting the trading floors. People asked, is that a cost savings? He said it's only cost about $20 million a year to run them. So in terms of their cost, it wasn't that excessive. So it wasn't a cost issue that they were looking at to shut that down. Of course, a lot of the futures pits already went the way of the dodo back in 2015 out there. But still, for those of you who are interested in that, I know a lot of you are, a little bit of insight perhaps there. But let's get back into equities land. We got people doing double duty here, squeezing in uncomfortably so on the FTSE Russell hot seat. Just before I start breaking down the activity this week, Mr. Sean, I know you guys have some news this week, which is why Rick is joining you. So why don't you break us down, sir? What's been going on in your neck of the woods? Why are you guys so excited this week, sir?
Well, yesterday, and I'm going to let Rick follow up with some comments here, but yesterday we renewed our license, giving CBOE Global exclusivity to our Russell 2000, 1000, and Russell 1000 style index options. And we're very excited to be renewing our partnership with them, which will extend out 10 years. And we couldn't be more excited to be continuing to stay aligned with our valuable partners at CBOE Global and with Rick Rosenthal. And working with Rick, it's been a great experience. You know, I've been in this role for a little over 3 years now, but I've been working directly with Rick this entire period of time. And from an exchange perspective, we couldn't have a better partner. And Rick's been fantastic for not only working with me, but he's phenomenal with clients. And it's great to have him on the show. So, Rick, would you like to add something there?
Well, Sean, thank you so much. Normally, I sit next to you in front of Mark at this podcast, and today we're not together, but if we were sitting together, you would see me beet red, blushing. I want to say, return the compliments. FTSE Russell has been a great partner to CBOE. We have worked well together over the years. FTSE Russell is considered one of the premier issuers of indexes, and it makes a great complement to the family of proprietary index products that we have listed over at CBOE. Super excited about some of the things that we're going to be working together on, and I don't want to. Well, maybe it's a good time to announce we've got a co-hosted webinar coming up on May 12th between FTSE Russell, CBOE, and CME. So this is a great opportunity for us to collaborate, shine some light on the small cap world, and kind of like the picture, the movie Rocky, the Russell 2000 has been beat up quite a bit, and it was down on the mat, and now it's coming back. It had a great run the past 6 days, and there's a lot of interest in it, and we'll get into it a little further down the road. But we're super excited about this partnership. I'm super excited to continue working with Sean, and there's a lot to talk about.
I'm excited you guys are doing joint webinars. At the end of the day, it doesn't matter what C you have in front of your name, right? Everyone's here to talk small caps, and I'm glad to hear everyone's diving into the fray there. Speaking of that, Rick, I'm curious. You know, Sean mentioned you guys locked them in for 10 years. That's a long period of time for any product out there. I'm curious, why did you guys decide to go that length of time? What was it you saw in Russell 2000 made you say, hey, we want to be in this game for the foreseeable future?
I want me to take that, or Rick, do you want? Oh, go ahead.
No, it's best that you take it. I was not privy to those discussions. So go ahead, Sean.
We just came off having a 5-year relationship with CBOE Global, and to continue that relationship for a 10-year period gives us which was a fantastic 5. So now going 10 gives us the ability to really work together strategically to create those next suite of products, and to think strategically in terms of the client. It's where FTSE Russell and CBOE do so well, and that is listening to clients. What are the problems they're looking to solve, and then coming back to them with strategic solutions to those problems. And to do that, it comes in the form of products and efficiencies in the marketplace that CBOE Global has done such a great job of doing with our index products. So hopefully, in the not too future, we'll have some new products. Just mentioning products, I have to bring up RVX because it comes up every show, Rick. And now that we've got you captive on the show, RVX Futures has been getting client demand on this show since I've been doing the show. So now that we've got you, it's definitely something that we are going to look forward to continue talking about, as there's so much discussion between the VIX and RVX as two indicators of very, very important volatility between large and small caps. So I just wanted to bring that up as well. But 10 years, strategic ability for us to work together and focus on our clients and to together create solutions for them so that they get what they need in these markets. And it's just an exciting opportunity for us to just continue that relationship for a really good period of time.
You know, Rick, Sean did mention the magic acronym there of RVX, of course, the VIX of the Russell 2000. We'll get to that where it's trading in a second. But as you mentioned, we've had a lot of people asking about it over the years. It's one of the products we liked. We miss it now that it's gone. We like having something we can sink our teeth into on the Russell Vol side. So, you know, if you were inclined, if you did want to maybe announce something here, you know, it's just me, you, and Sean chatting virtually here. You know, a whole bunch of people listening later. But it's just me, you, and Sean chatting virtually here. So if you wanted to announce something, we'd try to keep it between us, sir. What do you got for us?
Well, I'm excited to announce that CBOE has continued to calculate and distribute the CBOE Russell 2000 Volatility Index, which you can see going to CBOE's website on a daily basis. So the index is out there. We talk about it. The street talks about it. Our customers talk about it. And so it will certainly be a topic later. But I do want to point out, CBOE is considered, you know, the premier exchange for cash-settled index products. We have a pool of liquidity. We've got price transparency. We've got a great platform. But we also have this group that creates these indexes. And we're happy to have 6 strategy benchmark indexes, like a buy right, put right, based on the Russell 2000 and the volatility indexes. And I expect that family of strategy benchmark indexes to grow in the near term. So stay tuned for that.
Oh, I did lie. There is one other person. Mr. Russell Rhodes is listening live to us right now. He just chimed in saying, do it. My favorite volatility index. I want to trade it. So there you go. One more voice there, Sean. Or I should say, Rick, to add to the crush of people.
Hello, Russell.
Who want RVX to come back. Everybody wants it back. So there you go. If Russell wants it, we have to make it happen now. But let's talk about what's lighting it up out there in the equity space right now. It's been a weird, somewhat conflicting narrative week. I talked about this a little bit on the option block. Even Blue's talking about the same thing. Blue stealing my thunder over there on CME. I'll have to talk to that guy over there. But of course, it is a weird week. We're seeing kind of competing and somewhat conflicting narratives out here on the equities side. Let's start in small cap land, because of course it was just rock'em sock'em robots week. Small caps were kind of outperforming coming into this, or underperforming, I should say, net compared to large indices like the S&P. But coming into this week, they were just blowing the doors out. And they've been leading the dance on week-to-week basis for a little while now, as they are just so much more volatile out there. They ripped up 2.5% on Monday, and then another big rally yesterday. Russell's up nearly 5%, 4.83%. So these moves are just kind of ridiculous out there that we're seeing out there right now. Coming into today's show, we're seeing the markets kind of digesting other news. It's kind of a bit of a dance of, is this drug good? Is it not good? Will Gilead save us all? Will it not? Will this vaccine overseas save us? What's going on with the unemployment numbers? All these things kind of conflating. We saw for a while there a lot of optimism about the Gilead drug, so the markets were rallying today. Come on the other side, maybe saying maybe some of the Chinese numbers out of the clinical trials aren't as good. Also, the unemployment numbers weighing on the economy, as well as just the general economic malaise that's going on out there. Coming into showtime, we are seeing a lot of red on the equity screens out there, with the Dow and the S&P all off over 1%, the NASDAQ off about, not quite 1%, about 0.75% or so. And out there coming into, at least to today's show, Russell out there at about 13.14, which puts it up about 7% so far this week. A strong week out there in small cap land. Coming into showtime, we saw our old friend, the VIX Cash, at about 35.25. That puts it down, about a little more than 4 points, about 4.25 points from where it was last week. The volatility of that volatility was at about a 118, so still hovering around that frothy, that turbulent 120 level out there, which is elevated. It means it's time to pay attention if you haven't been already when it got up to 160 and above. Certainly pay attention at 120. And our old friend, the RVX, aka the VIX of small cap, down a little bit, down to about 43 and a quarter, down not quite 3 handles, about 2 3/4 handles. That puts that spread, at least come into showtime, it's always a moving target, at about exactly 8 points. So that's all a lot of table setting there, Mr. Rick, to say it's been a little while since you've been able to join us on the program. I'm curious, like Sean, you're out there engaging with the end users, the clients, the customers, the traders, the people who are out there slinging this small cap stuff. We've seen a ton of volatility, a ton of movements, just 5% yesterday alone in the small caps. What have you been hearing from end users? What have you been hearing from clients about the volatility, about the volume, about what you're seeing out there? What's been lighting up your tape since the last time we chatted, Rick?
So in the month of April, we've had, let's say, 21 trading days, 13 of which were up days, 8 were down days. And what's interesting is that the average up percentage, the average percentage up was 3%. The average percentage down was 3% on a daily basis. So we're seeing high volatility, which is why we're seeing elevated realized and implied volatility in the Russell product. Now, what's interesting is that typically RVX trades at a 3.4 premium over VIX. Small caps have a tendency to be a little more volatile than the large caps for a variety of reasons. So the average spread between RVX and VIX is about 3.4. It got as wide as 14.6, and now it's come back to 8. So we're looking at the relationship between the two, RVX and VIX. And when you had this big move in small caps, where you see the small caps outperforming the large caps, typically there's an inverse relationship. When you see stock prices go up, volatility goes down. What we're not seeing the Russell volatility going down at a greater rate than VIX. So there might be an opportunity there. There might be an opportunity for those who want to trade a volatility on Russell versus volatility on a large cap. So I would say what we're seeing is interest in the Russell 2000 responding to the economic stimulus, the expectation that U.S. economy might come back faster than anticipated. And so we're seeing movement, positive movement in the small caps. And for those who want to get long or express a long view, when you have 3% daily moves, you want to protect yourself and you want to express your long view with some risk protection in place. And obviously we're saying for those who are interested in getting long, buy call spreads. And we've seen a lot of trades in the call spreads and calls over the past week.
Rick, I'm curious, in the past we've seen a lot of action coming in on either the Russell or the S&P or sometimes both when that spread gets either extraordinarily wide or extraordinarily narrow. Let me just cheat while we're talking about this as well and bump up a listener question. This comes from, I like this handle, Nicodemus. Nicodemus wants to know, how are we standing at the current VIX to RVX ratio versus history? Well, Rick just laid it out for you. We got as wide as about a 14 handle. It typically averages around 3.5 points. And again, that's small caps over large caps, because just think about it. Small caps always going to be structurally more volatile than large caps out there. And right now we're hovering, again, this is moment to moment. We're looking at the cash. That's going to fluctuate. But it was at about 8 points exactly, actually, coming in to the start of the show here. So not quite at the apex of that spread where we were a few weeks ago, but nowhere near the 3 points either. So it's still pretty wide, pretty frothy. Getting back to my question, Rick, I'm curious, when you saw, particularly at that apex a few weeks back, and we saw that 14-point discrepancy in the vol between Russell 2000 and the S&P 500. Were you hearing from a lot of trading firms out there that maybe this was an inflection point? This is where they're really looking to dive in and start trying to arb that spread like they like? Or maybe on the flip side, was that at kind of the height of the madness there in March where they were just too overwhelmed? Was there too much else going on for them really to dive right into both of those, Rick?
Ironically, in the past, when we've seen spikes in volatility, extreme moves, there's a tendency for VIX to actually, the volatility in the large caps actually accelerate at a faster pace than the small caps. So what was surprising is VIX did not trade at a premium to RVX when we reached that inflection point. They were essentially the same. So as far as the activity in the options RUT versus SPX, we don't. I don't see necessarily a spread market per se. I do see the let's say vertical calls, vertical put spreads. I see open interest. I see put call ratio in each. But I'd have to say that the volatility trading in Russell has been very good in the past week. And you're seeing what's interesting right now is that you're seeing the volatility risk premium, the implied minus 30-day implied minus the 20-day subsequent at a discount, which is unusual. Typically, there's the implied is at about 3% premium over the realized volatility, and that's happening in both the large cap and the small caps. So, there's some interesting anomalies happening in the marketplace, and so we're not quite at an equilibrium. There's far more hedging going on in SPX than in RUT. I mean, let's face it, the volume in S&P options is 1.5 million on average, and in March it was over 2 million. Russell, we had a good day yesterday. It was over 50,000 contracts, which translates to about, let's say, 8 billion notional versus over 100 billion in S&P. So very different markets, very different dynamics. But you're seeing more of a bullish tone in the Russell, even more so than NASDAQ and the S&P within the past 6 trading days.
Speaking of what's going on out there in Russell, let's take a peek right now over there on the E-mini on CME there. Russell coming into showtimes at about 13.14 or so, up about 7.33% on the week. Listeners, in the past, we've seen the lion's share of the paper be usually a little bit far out of the money puts. This week, they're not that far out. They're only a few weeks away, about 15 days to go. They're the week 3 May puts, 1070. If you're so inclined and curious to find out what's going on out there. 1070 puts leading the dance by a sizable margin out there, as well as the 965 puts right behind it. Maybe it looks like some, they were trading in lockstep both days, Monday, Tuesday, and Wednesday. It looks like some verticals going up. 1070, 965 verticals going up Monday, Tuesday, and Wednesday. Interesting. And closing on both. So maybe there was a bit of a vertical or something else out there that was being taken off. Either way, trading pretty much every day this week. Both of those strikes. Kind of interesting out there. In terms of the skew, this contract, by the way, did about 32% of the paper out here, this week 3 contract here in May. And it's got, let's see, the vol, by the way, is up about 2.3 points. Interesting note on the vol in Russell 2000. The front portion of the curve getting bid up. Again, kind of calling that vol is a little bit disingenuous out there. It's mostly gamma when you get sub 2 weeks out there. But beyond the 2-week point, you start getting a little bit longer term out there. Let's say you get out to DEES, for example. The vol is actually in substantially, about 9 points. So longer term vol coming in pretty aggressively out there in the small cap land. But in this contract we're looking at here right now, with about 15 days ago, the vol's up about 2.3 points. The skew, the puts were bid about 12.25% this week to about 14.25%. So the puts actually getting bid up a little bit, and the calls getting a little bit more offered. They're 11.5% cheap to get the money this week. They are 13% cheap. We could talk small caps for a while. I know you guys have some more questions about that, so we'll get to those in a minute. I want to try to squeeze in a few other products as well out here. We'd be remiss if we didn't touch on what's going on in the product category that was dominating the tape last week. Hopefully you guys, seem like a lot of you did enjoy our special deep dive into all things WTI and the debacle that unfolded with USO out there as a result. You guys had a ton of questions on that. Hopefully we answered as many as we could. You guys have more. We'll try to get to more of those. But that delicate ongoing dance between USO and WTI. Man, USO is a completely different beast even than when it was when we were talking about it a week ago. They've gone farther out across the curve, picking up contracts hither and yon everywhere. The old days of where it was just trying to approximate that front month WTI future and doing a somewhat meager job at that. Those days are long gone. Plus, of course, We had the 8-for-1 reverse split now. It's trading around 8. I think it's up to 19 now as we speaking. I haven't checked it in a little bit, but so a lot going on out there in crude land. Coming into today's show, we're seeing WTI net on this week. So remember, when I talk to the movers and shakers at the top of the show list, that's from last week's show. When we run the This Week in scan, that actually starts from the beginning of the week. So a little bit different frame of reference there. And by that frame of reference, WTI is up pretty strong, up about 10.7% here on the week, coming in about an 1875. So getting a little bit of love out there. People were worried that this repeated beating on the front month future would continue, and that would annihilate our next contract, our June contract, into negative territory. So far, haven't seen that, even though some of the storage issues are still lingering out there. The big contract out here this week is coming up in the June timeframe. Surprise, surprise, with nearly 40% of the paper going up. By the way, as always, you guys can run your own reports. cmegroup.com/TWIFO to get all this data for yourself. The 40% of the paper coming in this June contract. It's got about exactly 14 days to go, so it's just coming in under our bar for analyzing skew. The vol coming in a little bit off, nearly 5 points on the week here. Again, 2 weeks ago, not a lot of vol there, but still, make of it what you will. Looking at the skew out here, the puts, oh, what a change the week has made. The puts were nearly 18% bid to the at-the-money last week. Not surprising given all we saw unfold last week. This week, a little bit more, just a wee bit more, to the tune of 32.7%. So yeah, a lot more juice creeping into those puts out there. The calls, 4.6% cheap at the money this week, 17.6%. So they're crushing the calls. They're bidding the puts. Again, this is a very near-term contract, so skews a bit of a moving target out there. But net on the week so far, that's pretty much what they've been up to out there. In terms of the big contract, let's see what's number one with a bullet out here in WTI this week. It's like it's a bit of a slugfest out here. It's pretty close between the 25 calls out here in June with 14,666 contracts, followed hot on its heels by the 10 puts out here in July with 14,264. Let's go out to these June calls first, because June upside, maybe not what you expected out here. 14,666, easy for me to say. The lion's share of those actually coming today. Not surprising, we're seeing a decent pop out there over the last session or so. So about half of that, 7,400 going up today. The rest kind of scattered throughout the week. Net kind of slightly closing, actually, coming into today's number. But again, we don't have today's OI, so it's hard to read into that. Also very close, I mentioned the 10 puts out there in July. Also the 10 puts in June, doing 14,336 as well. So pretty active on the 10 put strike across the board. That one, not surprising. Obviously, where a lot of that bid to that put wing is coming from on those 10 puts out there. Again, 14,300, 5,000 on Monday, about 4,000 on Tuesday, almost 4,000 on Wednesday. Not that much today. Again, we're kind of in a little bit of rally mode out there, so only about 1,500 today. And biased towards closing out there. So maybe some folks seeing perhaps thought we were going to break through that strike when we didn't. Maybe taking some of that off the table out there. Let's go on out really quickly to July to see what's going on in those puts, those 10 puts, pretty active as well. The big day out there was Tuesday, nearly 6,000 on the tape on Tuesday, 3,600 on Wednesday, 4,200 today, which is kind of interesting, a little bit of a different story than what we saw in the June contract. And those were net opening, about 2,600, again, without taking into account today's paper out there. So again, we've said it before, people will trade near-dated contracts in WTI. For whatever reason, they won't trade a listed weekly. That's probably just more of a logistical behind-the-scenes issue, maybe some of the brokers displaying the quotes. Or we've explored that issue ad nauseum over the years. I still don't have a firm answer as to why. But they will trade contracts going away very near-dated, just not a listed weekly out there, which is interesting. A lot popping off in WTI out there this week. As you might imagine, our buddy Mr. Blue, he's been doing some interesting breakdowns out there. Check out his research if you haven't done his way. He's talking about the crazy contango out there. This was coming into earlier this week, so it's changed a little bit out there. Steep contango, the time he did his report, it was $11.50 for that front June contract and $18 for the next month. So it was a pretty steep contango. Going out a year, we were at about $30. Coming into today's show, we're seeing 1 month at about $18.75. And then we're getting out there to about $21.61 out there. So it's mitigated quite a bit. You get out to Dees, you're at about nearly $30. So he's right there. It still is at about $30 out there at the longer term. So this is, again, reflecting that longer term, more staid outlook versus the shorter term madness out here, as Blue terms it, anxious mode out here right now. He also has his market sentiment indicator, which is kind of interesting. Check out his report if you haven't seen it. It does show kind of this data also going to be reflected, obviously, in the put skew as well out here. He's showing in his sentiment indicator a strong bias towards the downside, around a 20% downside move in the near future, over the next 12 months. That's what the expectation is. So that's going to be reflected in the put wing, which kind of what we're seeing out there as well. Check it out if you are so inclined. A lot of you had comments and questions about what's going on in your old favorite. Don't get a chance to talk about it a lot here on the show, but it's kind of hard to ignore it this week. Time for a little bit of hashtag hog love. If you're looking to where to find that, listeners, go to the agriculture drop down, head on into livestock, skip over live cattle for now. Going to go into lean hogs instead. This has been making a lot of headlines out there, a lot of pretty dire ones. We saw the CEO of Tyson Foods coming out saying he thinks the food supply chain is in danger of being broken out there, of course, as a result of the coronavirus ripping through a lot of these meat processing plants. We've seen hog futures having all sorts of dramatic movements as a result of this coronavirus. For a while there, of course, just about every restaurant shutting down at least inside in-person table service. That killed demand for the hog futures and indeed the cattle futures. Now, of course, we're seeing a bit of the opposite. Even though demand really still isn't there, at least hasn't recovered from that aspect of restaurants coming back online, we're seeing a lot of plants actually shutting down now as a result of this coronavirus pandemic. So we saw the hog futures actually hitting their limit up on Monday earlier this week. We're seeing tightening domestic pork supplies as, again, we're forcing slowdowns and shutdowns at slaughterhouses. So at the end of the day, the demand is one thing, but the supply having all sorts of issues as well. And that, of course, driving us back to the upside on that graph. We're seeing Smithfield, Cargill, Tyson, all of them have halting operations at about 20 different slaughtering houses and processing plants just since April. We've seen a lot of spread of the disease around the meatpacking workers in those plants because they are very tight quarters and not exactly the most sanitary sometimes. So as a result, there's been a lot of outcry about that. The unions speaking out about that, and those plants are shutting down. And now those plants unable to get their livestock. We have producers of hogs having to actually euthanize and cull some of their herds without actually being able to sell them at market, which is they're taking hogs actually out of supply, which again, kind of analogous to what we saw in the crude space. There's this desperation on the part of the producers. What do we do with this supply we have that we cannot deliver to market? So it's a very these are wild times in hog land. Again, the hog slaughter, if you're into such things, not a number we normally quote here on the show, but it was 2.8 million head a few weeks ago in late March. In the end of April, it was 1.986 million head, so nearly a million head less coming into this month, end of this week, actually. So that's just reflecting what's going on out there. Obviously, the hogs moving yet again this week, up about 12.5% here coming into showtime now. That front future, if you don't follow the lean hogs, and a lot of you maybe don't follow the futures that closely every morning, 59.10 is where we're at out there right now. It's up about 12.5%. It actually was a fairly active week. This was people used to ask us about this a lot on the show. Hey, what's going on in lean hog? What's going on in lean hogs? And never really was much of an option story to tell. So we didn't really talk about it that much, except maybe in sometimes joking terms. That has changed a little bit. Looking at about 59,000 contracts on the tape this week. So a pretty active week out here, all things considered, for the hogs. I'm going to guess a lot of that's on the call side, but hey, you never know. Days when you're locked limit, things tend to go a little bit crazy. It looks like the lion's share of the activity out here this week, with about 52% of the paper was in that June contract. And ironically, though, actually the biggest print was out there as well. There was the 50 puts, so just about not quite 10 handle out of the money puts out there in June, doing 2,750 contracts, which doesn't sound like a lot, but when we talk about lean hogs, that's a ton. The lion's share of that, almost half of that coming, actually a little bit more than half of that, coming on Tuesday, about almost 1,400 going up on Tuesday, about 500 today, 470 on Monday, and 300 odd on Wednesday. So that was a big print out there. The 40 puts also getting a little bit of love, but not quite as much as the 60 calls. So again, was some upside to be found out there. There are just 20 contracts behind the 50 puts, doing 2,728 of the 60 calls pretty evenly throughout the week, 700 and change on Monday and Tuesday, and indeed today out there. So pretty even numbers on the 60 calls, despite the fact that we were locked limit on Monday and have been moving to the upside for the lion's share of the week. That's kind of interesting out there. Let's go a little bit farther out to see if any other esoteric paper is lighting it up out there. Before we do that, let's break down some of the skew. Don't get a chance to dive into hog skew too often out there. The vol in this contract, listeners, actually off quite a bit, off almost 3 points. It's at about a 73 out there right now from an implied vol. So obviously still volatile, but off a little bit compared to where it was. And this contract has about 43 days to go. So there's still some meat on that bone from a vol perspective out there. It's not all gamma all the time quite yet. In terms of skew out here, last week the puts were 2% bid to the at-the-money. This week they're nearly 12%, 11.8% bid. So the puts getting bid up. Kind of interesting. The calls were 8.4% cheap to the at-the-money. This week they're nearly 11% cheap. So kind of interesting. Maybe as we've blown through some of these strikes to the upside, people have taken them off, and they haven't. Maybe they're fading this upside move now, given the fact that demand is still effectively annihilated out there, and maybe they're seeing what we're seeing out there in WTI, taking the opportunity to fade any blip to the upside by dumping calls. Either way, the calls are in. They're up down to nearly 11% cheap versus 8.5% cheap this time last week. All right, we got a lot of questions coming in from you guys too. Actually, before we do that really quickly, I know there'll be a lot of you ag fans out there as well. And wheat was leading some of the downside out here this week. So let's do a real quick check-in on all things meat. Or some meat. We just did meat. All things wheat out there. Yeah, let's go on out. Find it in the grains and oil seeds, listeners. Go a little of the old SRW wheat out there. Coming into showtime, we're seeing it's a little bit not quite as dire as it was at the top of the show. See, on a week-on-week basis, wheat was off about 5.25%. Net on this week, though, is only off about 1.33%. Puts that about a 523.5 out there right now. The most active contract was out there. Like in the July, looks like in the July contract, with about 56, almost 57 days to go. 43% of the paper, we're at about a 523.5 out there right now. It was the 500 puts, listeners, leading the dance by a pretty strong margin, nearly 8,000 contracts going up this week. The lion's share actually today, with about 2,000 today, 1,100. Actually, I take that back. 4,500 went up on Monday as well. So pretty light day on Tuesday, only 170. And the rest kind of scattered throughout the week. Most of that opening. So opening 500 puts, maybe some folks not exactly feeling the love here at this 523 level, thinking we're going to break back down below the 500 level. Either way, those puts leading the dance, followed closely by the 510 puts. So a little bit closer puts, doing about almost 6,000 contracts. The lion's share coming on Wednesday, 31, almost 3,200 lion's share. That slightly opening on the week, not quite as much as it was on the 500 puts. And let's look at the vol really quickly here. Vol in this contract out here in July. Vol is actually almost unched. Kind of interesting. It hasn't been a big vol story out here in wheat over the course of the past few weeks or months, and that's pretty much the case right now. Off about a third of a point, hovering around a 29.15 or so in terms of implied out there in this July contract. In terms of skew, the puts were about 2.5% cheap to at the money this week. They are about 1% cheap. So getting a little bit of juice back. Not surprising. We're talking about those 500 puts getting a lot of love and the 510s. So probably bidding up that put skew a little bit. Seeing the calls, they were about 8% rich to the at the money last week. This week about almost 4%, 3.8%. So the calls coming in, puts getting a little bit of bid. We're seeing the wheat trend down a little bit, so not exactly surprising out there. And hopefully you guys have some surprises for us. You always do. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. This is your portion of the show where you guys take the reins, your questions, your comments. We already talked about the one from Nicodemus about the RVX VIX ratio out there. Let's get this one up here from Thomas. Sean, this one's for you. Quite literally, he asked for you. Thomas wants to know, can Sean confirm that the traditional Russell reconstitution event is still planned, a lot of spelling errors there, event is still planned to unfold as scheduled, and that there will be no impact from the coronavirus pandemic? Thank you, and I enjoy the program. You know, Sean, this has been a relatively frequent inquiry on the program. I think you touched on it last week, but if you want to go out there and reassure folks, again, have at it. Then if Rick, if you have anything to add after Sean, feel free, sir.
Great question, Thomas. Thanks for asking. The schedule hasn't changed, so Friday, May 8th is rank day, where Russell Index membership eligibility for the reconstitution is determined from constituent market capitalization at the close. And then May 22nd, the query period begins. And there's a whole schedule of events leading up to reconstitution, which will culminate on June 29th, where equity markets open with the reconstituted Russell U.S. indexes. The big day of Russell reconstitution is prior to that. It's June 26th, which is the close, where we see record volumes on New York Stock Exchange and NASDAQ, where the reconstitution happens at the close. So it's a big day, big volume day, and that date is set for June 26th. There's a couple other dates between May 8th, rank day, and June 26th for recon. There's add and delete days. There's a lockdown period that happens in mid-June. So there's a couple of dates that are involved in the reconstitution, but June 26th is the big day everybody looks forward to, and it's record volumes on our partner exchanges, NASDAQ and New York Stock Exchange. So very excited that that schedule will commence as scheduled.
So there you go. No plans there, Thomas, for any changes. It does take place pretty much the flip of a proverbial switch out there. It's all in a microsecond. All this stuff is done out there, so you can get it done even it's all electronic now anyway. So I mean the pandemic shouldn't really have an impact on that sort of thing. A lot of people do seem concerned about that. Last week, I think this was in last week's live chat, Tony asked us, Tony Weber, has a shutdown of the pork factories made the futures options squeal? Well, yeah, hopefully Tony and everyone else who's been asking about the hogs, you enjoyed that little bit of a rundown we just did about all things hog, hashtag hog love out there. But yeah, short answer, yes. The options were squealing, lighting it up out there, a substantial volume out there, as you would expect. So yeah, I used to always joke about the hogs not really being an option story, but I think that narrative has changed. We can talk about some hogs. So if you guys want some hashtag hog love, like Tony did last week, then hit us up. Let us know. Next up, Ronald Müller. I'm guessing English not his first language out here, but he does a good job of it nonetheless. He wants to know is there anything MIME, I think it means like a put call ratio for silver and gold. And he goes on to clarify himself, kind of a sentiment indicator to evaluate gold and silver. Well, short answer is yes, Ronald, and long answer also yes. There are a wide variety of sentiment indicators that you could use for gold. But in the direct answer to your question, yes, there is a put-call ratio for gold. In fact, anything that has listed options on it, you can go and derive a put-call indicator for that product. It's pretty straightforward. Go look at the calls, go look at the puts, see which one's over, and proceed. I'm looking at it right now for the open interest out here in the COMEX gold options over there on CME land, and we're seeing, let's see, the most active contract out here was the June contract with about 44% of the paper this week, and that contract is 62% in favor of the calls. So 62% calls over the puts, only 38% out there. So that should give you a little sense of what it was. And that's actually up a little bit. It was 0.59, 59% last week. Not surprising. Gold has been in upside mode, notwithstanding the last few sessions. Over the last few weeks in general, it has been in upside mode, as we've seen some tumult out there in the broad equity space, issues with the dollar, all sorts of issues. So gold has been in upside. Not surprising that the gold bugs have been piling in to the calls. We can go month by month if we like, but I think you get the picture out here. You can generate that yourself. So yes, short answer, there is a put call for gold and any listed option. If you want to go beyond that, you want sentiment indicators. A lot of one people like to look at as well is the gold-silver ratio. It's a pretty straightforward one as well. How much silver does it cost to buy an ounce of gold? When it's high, people think usually that tends to lean towards silver. When it's low, tends to favor gold out there. Right now, there's great, just look up gold-silver ratio. You can find that pretty much anywhere that tracks the commodities. You can look at it by the 1 year period. Look at 30-day. I'm looking at a 30-day chart right now, and over the past month or so, it peaked out around 115 and a quarter, and right now it's at about almost 108, 107.95 or so out there. And that was kind of the low. Actually, that was the low of where it dropped. That was about 108, and right now it's at looks like about a 112 or so. So right in the middle of that range out there. So there's a bunch of different sentiment indicators. You can look at gold versus SPY or SPX. There's a lot of different sentiment indicators people use for gold, but those are a couple of the most common ones out here. Let's see. Let's go on. People have USO on the brain. It's hard to ignore. The Blaze wants to know, am I crazy to actually think some of these changes to USO are long overdue and actually make it a strong product going forward? A great breakdown of all things crude last week, by the way. Well, thank you for that, The Blaze, and everyone else who chimed in saying you liked our breakdown of all the mad dance between USO and WTI last week. Yeah, when things go negative, you can't really ignore it. It's an unprecedented event. You have to really sink your teeth into it. Are you crazy to think that? Well, I guess it depends on what you mean by stronger out there. If you're someone who just wanted what USO purported itself to be and was for the lion's share of its life, which was something that tried to replicate that front month future and did a somewhat middling job of it, then you're probably not that happy with this. But on the flip side, if you want someone who wants this product to survive, then yeah, I think from a overall health right now, especially given how the futures term structure has shaped up of late out there in WTI, you want this product to expand its purview beyond that front month. You don't want to get caught in crazy sell-offs like to the negative side like happened just last week out there. You want it to spread its wings a bit, go farther down the expiration curve, get to some more sane, more level-headed contracts. And also, it doesn't really have much choice. The fund inflows have been massive. It's hitting position limits just about every month that it's in, so it has to expand. Luckily, the prospectus allows it to do this. So I guess it depends on what you prefer. Do you prefer something that replicates the front month or something that looks a little bit more stable given what's going on out there right now, and also doesn't have a predictable and then easily fadeable roll cycle that you can come in and just kind of annihilate it on. It's going to roll on a much more judicious period that's kind of subject to their own whims. Now, again, there's a lot of subjectivity in what they're doing out there right now as well. Maybe you don't like that. But from a general, do I think this is maybe a little bit healthier product, at least in the near term while all this tumult is happening? Yeah, I definitely do. I would much rather have something that does this versus what it used to do a few weeks ago. Will that still be the case a few weeks from now? We'll see. We'll see how all this shapes up. But for now, you want something that's going to survive the next couple of weeks. I think this structure will allow it to do that. That said, our audience wasn't as optimistic on it. When we asked them last week, again, this was in the heat of the negativity, literally, in WTI getting negative. We asked you guys last week, do you think USO will survive to the end of the year? You guys were a little bit more split on this. You were 55% saying yes, 45% saying no. So I guess the Blaze kind of depends who you ask. I think this structure, at least for right now, is much more suitable. Of course, you have the reverse split to throw in there too. Yeah, I'm not as concerned about price levels as I am about what's going on with the core structure of the product. But that reverse split going to help a little bit, I think, in the near term to keep it from breaking down into that one handle to the downside, and all sorts of crazy things happen there as well. But I guess short answer to your question, at least for right now, for a product that can weather these current shocks better, I think you're not crazy. I think there is something to that. Whether that's a better product in the long term, I'll leave that up to others to think whether they want more exposure to the farther end of the futures curve or they want more exposure to the nearer portion of the futures curve. If you want that latter, then you're not getting that right now. So maybe you don't like this. But if you want something that's going to survive, then I think this is what you need for the foreseeable future. All right. Unfortunately, that music means we've come to the end of another epic journey through the world of all things TWIFO. But before we go, I want to thank my dual guests holding down, doing able duty on that joint FTSE Russell hot seat. Before we go, I was teasing you at the top of the show, Mr. Rick. But if you do want to leave us with any hints, any teases, maybe you want to announce a really exciting new product, whatever floats your boat, sir, now is the time. The floor is yours, sir.
Thank you very much. I just want to say thank you to you, Mark, and thank you to Sean for including me in today's call. Once again, I'm very excited about the continuation of our fantastic partnership with Sean Smith and FTSE Russell. And stay tuned. We'll have things for you. I'm sure you'll want me back.
I like that. A little bit of a tease. All right, I'm excited now. I'd love to have more stuff. Just more vol products to trade in general. I don't care what they're on. Is a good thing. Whether it's on small cap. Hey, you want to make a volatility product on lean hogs? I'm down for it. Here, certainly can merit it these days. Mr. Sean, same question for you, sir. I know you guys have that big market impact hub going on over there at FTSE Russell Land, as well as, of course, all the data analysis, recon coming up. If folks are curious, maybe they have more questions like they did today. Maybe they just want to reach out to you. Maybe want to leave them with a little bit of a tease of what you guys are working. What's up in FTSE Russell Land, Mr. Sean?
Thanks, Mark, and thanks for a great show. And thank you, Rick, for joining Mark and I. It's great to have you on the show, and I promise you will be back as well. We've got some exciting things happening in FTSE Russell Land, as you put it, Mark. Again, our website, FTSERussell.com, does have that pandemic hub of information in regards to the economy and market information. So please visit the FTSE Russell website for all of that. Also, be on the lookout for an announcement through Options Insider. We're going to get this to you, Mark, so that you can share this with your audience. Is that webinar that we're going to be hosting on small caps and the Russell 2000 on May 12th. It's going to be a fantastic show. I'll be on it with CME and representatives from CBOE and also a celebrity a person that will be announced as well. And that's right. I'm just trying to make it just a little more exciting to see that announcement, to see who's on the show. So that's May 12th. Looking forward to that. We do have Recon coming, but just one more exciting congratulations to CBOE and to us. I'm congratulating myself not myself, but FTSE Russell on extending our partnership for another 10 years. And we couldn't be more excited to be working together to provide those solutions to the marketplace going forward. And just very excited that that's in place, and looking forward to continuing to work with Rick.
Congratulate yourself. Go for it. You've earned it out there. I'll congratulate you on your own behalf, sir. Congratulations. And I'm very curious. I want to see who this special celebrity guest is on this webinar. Stay tuned to us, listeners. We'll put out the link to that webinar as soon as we have it, so you guys can dive deep into all the stuff we're talking about here, about the volatility, the skew, all that good stuff, and a whole bunch more. Speaking of a bunch more, if you need more in your lives, hopefully, first off, you've been enjoying the slew of content we've been hitting you with this week, not just option block, not just OPR. We got boot camp in there now as well. That's back into the rotation every week. We hit you with an advisor's option, pandemic, volatility, all sorts of good stuff out there as well. You guys are getting a ton of content out there. We got more for you. We got volatility views coming up tomorrow, 1 p.m. Central, 2 p.m. Eastern. Take a little break for the weekend. And then we're back again on Monday with the option block that kicks it all off till we're back here on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, CBOE.com, and CMEgroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.